Given how robust the economy is, how resilient the labour market is, and we're to keep that in mind when I read you out this quote from Mislav Matejka over at JP Morgan. He said Q1, in our view, will likely mark a turning point as the fundamental confirmation for the next leg higher might not come, and instead markets could encounter an air pocket of weaker earnings and activity as they move through Q2 and Q3. Rick, Q2, Q3 feels like a lifetime away. Now, I know you don't believe in the hard landing story. You're in the camp soft landing, have been for a while, but let's assume you are in the camp that it's a hard landing. And I call you up, Rick, and I say, look, I'm really worried about Q2, Q3. I think we're going to hit that air pocket. What do I do between now and then? Is there a window here for me to put money to work? What do you say back to those people?
So, I mean, well, first of all, I think January was one of the most extraordinary months I've seen in my career. The short covering rally in places that had been beaten down a month prior was pretty extraordinary. And by the way, I saw a stat that was the most incredible I've ever seen. The companies that missed outperformed on a price basis than the ones that actually beat earnings. This was a crazy, crazy month in terms of what performed versus what didn't. I think today, the stuff that hasn't performed, where you actually have quality income, persistence. I mean, look at healthcare, how much it underperformed. Parts of healthcare are not going to see the same sort of growth, but there are parts where you're actually generating really nice income. So would I take some of those income-producing assets, some of the, we call them the quality income today that have lagged in this surge to buy the short covering stuff that's rallied? I would do that. But listen, I think margin, part of why I think equities are just okay, is the margin compression is real. I don't think you're going to see a cataclysmic earnings dynamic. But in an economy that's okay, I think top line revenue is sort of meanders around. But I think you get margin compression. And so, part of why I'd rather buy income, both debt and equity, I'd rather buy stable income much more so.